Hi everyone. So in this video we will talk about VWAP and actually how you can use it in a day trading context. First things first, let's give a definition about what VWAP is. So VWAP stands for volume weighted average price, and it is used to reveal the true average price that a stock was trading at during any given point in the day. So you guys can see a VWAP price as the fair price actually, because the volume of shares is used to calculate the price. So it definitely looks more fair to me that $1,000 shares at $10 is more significant than $20 with 10 shares, for example. So about the calculation, this is just a matter of dividing total dollar volume by total share volume. So I'm gonna probably write it here. Here. So we can write VWAP equal number of shares about, makes sense, X for multiply by share price, and all of it divided by total volume. So a quick example, so to illustrate this calculation better, let's imagine we have a stock XYZ. So we have 4 prices printed with different size of shares. So for example, let's imagine we have 1,000 shares at $10 and 500 shares at $11, and finally 200 shares at $12. So the VWAP would be 17,900 shares. Well, not shares, because it's 1,000 multiplied by 10, then like we've said here, number of shares bought multiplied by share price. So 1,000 multiplied by 10 plus 500 multiplied by 11 plus 200 multiplied by 12. So that would be 17,900 divided, by the volume, total volume. So 1,000 plus 500 plus 200, which is 1,700, which is $10.53. So yeah, it looks like definitely it's that's a point of VWAP. The $10 price had definitely more weight than the two others, because it had 1,000 shares compared to the two others with 500 and 200. So that's a very quick definition of it. Also, just a quick distinction between the difference between VWAP and moving averages, because people seems to mix them time to time. I can see that on some chats. Definitely I can see people speaking about VWAP and and moving averages as if they were the same, but they aren't. So yeah, they seem similar, but they are not calculated in the same way. The SMA, or simple moving average, is obtained by adding up closing prices for a given number of periods and then dividing that amount by the number of periods. And you have also EMA, and just as a quick side note, basically EMA, which stands for exponential moving averages, just put more weight to the most recent price, so it reacts more. It reacts quicker to price changes. That's the key difference between EMA and SMA. So for example, for a 5-period moving average, it will take the last 5 prices and divide them by 5. So here we can see that moving averages don't use any volume for calculating the price, unlike VWAP. So here I've prepared four stocks that we can definitely show here. So here it's the VWAP, that's the blue line, and here that's the parameters, the settings. So in fact, I gave you a very simple and quick definition, but in reality, for calculating VWAP, in reality, it is definitely more difficult. Not difficult, but there are more steps. I think 5 steps. So to get the cumulative volumes, and I think we multiply the price by volume, cumulative one, and we divide it by cumulative volume. So that's how we get in reality the VWAP. And HL, here actually we can see the source. HLC3 stands for a high, low, and close price divided by 3. That's it. But leave it as it is. If you're using TradingView, leave the parameters, the settings as it is for a VWAP, and everything will be fine. You can change if you want the color. I've put it in blue because it suits me better, but you can put whatever color you like. So here you can see on the 1-minute chart, you can see Penn National Game, PENN, where you can see it bounces at VWAP. So it goes to VWAP and bounces, and go again, bounces, go again, bounces, go again, bounces. It kept on doing that for many times before going down. So yeah, it's definitely a tool you can use. Here another example for Microsoft. So as you can see, as soon as it crossed up the VWAP, it went up and starting to bounce up of VWAP. Almost, yeah, all day long actually. That's very interesting. And here DQ did two tests, one test and one retest before going up. So that's definitely something you can trade, something you can use for your trades. And BBY here on a 1-minute chart, same here, it kept on going to the VWAP and bounce, going back and bounce, down and bounce. Well, that's very interesting. That's I think VWAP is very interesting in the case of big caps stocks, because big institutions, hedge funds, banks, big prop firms kind of see it as how can I say that, as a benchmark price to gauge whether the stock is overpaid or underpaid, and so they use it to make order entries. Also, we have to take into account that numerous algorithmic trading programs use it. Yeah, also another interesting information that I think is very interesting to know about. That's brokers usually offers VWAP guaranteed order fill services for big investors and institutional clients. So in these scenarios, VWAP can be a very powerful indicator. So I personally use it only for big caps and never use it for low caps or mid caps. Well, when I say mid caps, actually it's I use it for 1 billion market cap stocks and over. So it's it's mid caps I think and big caps over. So you can use it for your trading. So you do your pre-market analysis. If you can profit on the price action, then you wait for it to see if it tests the VWAP and if it goes up, and then try to catch the retest. If it's retests only once, then you got it for once, for only one time. And if you can catch it many times, that's very good for you. So in that sense, you guys can totally use VWAP as a support and resistance in case of a short, because the opposite can also happen. So it can go under VWAP, going up at VWAP, and going under and going up, and same here, but the opposite. So I hope it will help you, and if you guys have any question, don't hesitate to put it in the comments, and I will be glad to answer it to you. Thank you very much, and take care.